Good morning, good morning, good morning. Let me know if you guys can see the screen and hear me as well. If all is okay on your end, just checking. We'll be getting started as soon as the news comes out, which is in about 5 minutes. We're gonna see if we can make a decision after the news. Let's see here. So right now I'm in this trade and I'm looking at this reversal that I got into here. This trade didn't trigger up here, so it's still sitting there as a pending trade. I don't think it's going to get back up there anymore. It's already come down. I thought it was going to get a second chance, but never pulled back. But that's fine. We did get this sell stop order here, and it's shorting. It's going to be shaving at TP1 here. So we'll see what the consumer confidence news gives us in just about 4 minutes. Consumer confidence is probably one of the largest and most powerful index that you could have. It's not really an index, I'm sorry. It's a survey is what it is. And so there's a company called the Conference Board. And what they do is they send out this survey to a lot of different consumers like you and I who just shop and buy stuff. And they're asked like over 3,000 questions, I think it is. It's a lot of questions. They get paid, of course. But they get asked questions on, how did they feel about this? How do they feel about that? What about this price and that price and this product and that product? And so it's a lot of questions. And after they come up with those questions, every single month, people who love getting paid to do surveys, they answer all those questions and we get that information. That information is then furnished to, other agencies, and they use that information to make decisions. And so if people are feeling, not feeling too good about the economy, then what happens is, and if we just use the S&P 500, for example, that's just going to go down if people don't feel good. If they feel great, the S&P is going to go up. And why am I using the S&P rather than the euro dollar? Well, because the S&P holds up to 500 of the major companies that we utilize their services and products of. And so if we're, asked 3,000 questions about, the products and services that we use, obviously it's going to be mostly about the companies that we frequent the most. So it's going to have the biggest impact on the S&P 500. Now, the S&P 500 and euro dollar typically can move in the same direction. They are not correlated. I wouldn't use that word. But you will see typically some movement in the same direction. And if our economy is good, people are, thinking good about the economy, then what's going to happen is that's going to make the dollar stronger. And if the dollar is stronger, what ends up happening is Dixie goes down. If it's stronger, the value of it begins to go lower because it costs us less because the value of it is getting stronger. And I hope that's making sense to you. But when that value gets stronger, this goes down. So that's where I'm going with the whole thing. So if right now our Federal Reserve has done a good job of making the people feel good, then Dixie should get stronger. And what's going to happen is this is going to get weaker because this will have an inverse effect to the dollar because the US dollar here is the quote currency, which is this over here, rather than the base. So, news comes out in 1 minute. We're about to find out. Let me go ahead and put a stop loss on this thing before the news comes out. 110, 377. Let's do that. All right, and I'm gonna go down to like a smaller time frame. All right, let's turn on. Oh, we're looking like downtrend right now. That's what we're looking like. If you guys have any questions or comments, go ahead and make them. I love questions. I love comments. We can have some dialogue. Right now, they're pushing up, but it's in a downtrend. They would have to break. Let's see if I'll move this here. So obviously the downtrend breakout would be here. And if that's the case, then the uptrend breakout, let's move this. Would be somewhere there. As you guys can see, I already have a stop loss there in case they come up here real fast and decide to come up here to the second one. Already safe. But it doesn't look like it's moving yet. It's already 7:01, and all we got was this little push here. So if this goes down, it means the people are still falsely feeling good. And I say falsely feeling good because nobody should be feeling good right now. We are officially in a crash. The problem is we're not feeling it because of the false positive movements that some of these big agencies are making to make us, not respond so erratically and quickly by moving money at the bank and making, rash decisions. So they pacify us with, raising and lowering interest rates and, making all these adjustments and changes. Let me go to a smaller time frame. Looks like the news isn't, whatever the results was, it didn't make that much of an impact yet. For those of you who don't know, maybe you're the first time with me. I have an oscillator that I've programmed down here. And what it does is it allows me to see in real time when institutions are adding buy or sell orders. So, that blue here is kind of reminds you of here. We have blue and red for buy and sell orders here. So I kind of did the same thing, except my blue is this blue here. And my red is more of a light red because I already had a dark red here. Trying to see if I can find one. Here's one here. So this lighter red means institutions have added sell positions. And you can see once they do that, look at the result. It pushes down hard. I don't trade those. I don't want you to think just because they change colors, that means sell or buy. What it does mean is that what the intentions of the institutions are. And we definitely want to see that. So just like here, we can see they've added some buy positions here, but not enough to fight against all of these sellers here. They're going to have to add way more buying positions here to fight all of this off to get up at least to this level here. I'm going to go ahead and add a I think I'm going to do add on because I didn't get to do this trade here. I normally like to trade a standard lot, but they wicked up here and my order didn't get filled. So I think spread at that time was higher than I anticipated. By the time price action got up here, something happened where it didn't trigger. So I only got this order triggered, unfortunately. And by the time I looked at it, it had already moved, and I thought it would, like this might come back or something, but it just never happened. So looking for an opportunity to jump back in. So I think I might take this one here at 110.15. Let's do a sell limit order there. There we go. So I just added another sell limit order here. We're just gonna do a small one. I'm not gonna do a full standard. I'm just gonna do like a half, just in case it pulls back some more. I can add another one somewhere else. Let me turn off all this stuff here. So there we go. News is coming out. Buyers are coming up. For those of you who want to take the risk with me and you want to jump in on shorting this trade, you can see here on the 1 hour. This is where I'm headed. So this will be an aggressive entry here if you guys want to take it. I'm already in the trade up here, and I'm going to be TPing. So for those of you who want to do, let's say, a quick day trade, this will be a good one here. Sell limit order here at 110.15, and your take profit will be at 109.75 if you just want to do a real quick scalp or day trade. I'm going to take this down to TP2 as well. I'm going to shave when I get here at 109.33. And then my last attempt would be at 109 to TP from this short position here. By the time I get down here, based on the 15-hour, I have 3 buy limit orders here because I'm doing what's called dollar cost averaging. I'm splitting my positions up here in these 3 areas. And so the main area will be this daily open price here. There happens to be a demand level at the very same price as the daily open. So I'm going to put most of my trust in 108.66. That's my preference. But I do want to get in early because this is where it starts if we go to the 15-hour. So you see this candle here, it's this range here. So I'm expecting, price action. Whether it's today's news or any other news this week, I expect all news this week to just keep pushing this thing down, 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 down. Because I believe this is the curve they're working through. Curve meaning this pivot high down to this pivot low. And they need to, or should, come down and satisfy this area here. So we have some unfilled orders below here. We have daily open price here. We have a demand candle here. We got a lot going on. So it's pretty promising. I did a video yesterday, so you can check that out on TradingView, explaining to you all of this information in greater detail. So you can check that out. I'm just on here real quick to see what happens with the news and if I can get another add-on to make some more money. But they're playing with me right now. So nothing spectacular. This news has not done anything spectacular. Oh, see, I didn't know we had this level up here too. Let me go to 3 minute. Let me make sure. Hold on. Oh, they're all uptrend. So this is uptrend. This is the only level. And this one here. These are the only 2 that I would respect. Let me see here. Put something there. Something there. Let me go higher. Same. Now it's just this lower one. Now it's the higher one. Oh, now it's the lower one. Okay. That looks really good. What is this? The 80 minute? Come on, 80 minute? That's clean. All right, so we're good to go on this limit order. Oh, look at it. It highlighted it. Perfect. I'm going to switch this uptrend breakout to here. We don't really need anything right here yet. But I'll just put it there for now. because that's what it represents. So what I think is going to happen now, since you have this daily open price here, since you have this daily open price here, they're probably going to bounce off of that, because we also have support here. I'm going to move this support line here. And we'll move it to this area here. Yeah, so I'll probably say from there, let me give you guys a range. So from here, let's say to about there. Let's raise this up. As a matter of fact, let's take this out. Let's put this up here. Bring that down. Put it in the middle. And this is off the 80-minute chart. All right. So I hope you guys can, let me get rid of this here. Turn off a lot of this stuff here. Get rid of that too. Actually, you know what? I'll just hide it. That's a because I will need it later. Hide that. Hide that. There we go. All right, so you guys can see it's turning white. I had that coded so that it could let me know if the bulls or bears are fighting. And so that's what that is here. This is a fight between bulls and bears. Neither one is winning. It's just kind of neutral. That's what it's saying. That's kind of good that it's neutral, because that means we also have a chance of it pulling back. That the bulls can kick in a little bit and push it up some. But I think they're going to hit this daily open price. So every day there's a price that the market opens at. And so if you guys want that indicator, it's there. Just look up the word daily open. And then it'll kind of show you where everyone is. Problem with daily open, don't trade it. I'm going to tell you now. Because look at, like, let's say this here and you wanted to trade this long. You're going long, but look how it came right back to the daily open. It even went lower before it took off. This one says short, it's down. But what happened overall? The market went up. So don't use it for that reason. Don't trade this. Just use it as a barometer or an indicator of what could potentially or possibly happen. That's all. So just like now, I identified this support area on the 80-minute chart. I identified it as minor, meaning we might get a pullback, but it will not reverse the trend. So I'm anticipating that somewhere in here between this yellow line and this one, that maybe they'll react off of here and give us a pullback. If not, then they're probably going to come all the way to our first TP here and then possibly pull back. And I'm saying that because we're in between this pivot high and this pivot high. So we're in between this curve, and we should expect something. I mean, if it blows through, it blows through. But I'm just looking for an opportunity for them to pull back and grab this. Now, if they want to make me some money before I pull back, before it pulls back over here, great. I'll take it. We're about to find out because they are pushing hard. Now, you guys could have jumped in and shorted this, but I don't believe in chasing price. I believe in price coming to me. And so that's why I don't tell you guys, oh, jump in, push the trigger, unless it's like right there. And I can determine that in the moment. But it wasn't really doing much when we first came on. And now it's moving in an explosive way. All right, let's see how far we've come since 7. So this is where it was at 7. So it's moved about 20 pips. That's actually really good. Yeah, so that was a good move from the news. But again, regardless of what we see in the news here, this thing shorting, if a lot of people are looking at this, they're most likely jumping in on the short because they can see what I see, which is it's coming down. All right. But what do the institutions typically do? They'll do this during the news. Everybody will jump in on the bandwagon and then they'll pull back and take all those stop losses out. They'll get everybody out of their trade. Because this pullback right here, this thing, I don't think anybody's going to be able to, the average person is not going to hold almost 40 pips. They're not going to give that back. So the institutions are going to win that one. Let's see here. So we're going to wait for them to come back to us. So we're just going to wait. We're not going to jump in on a 40 pip move. We're going to wait for them to pull back to us. You guys can see here, I've already identified a potential area of supply. We have a minor support level that it's currently in. Let's see if it violates it right here. If it violates it, fine. I'm already in the trade. I'm just trying to find an opportunity for you guys to jump in if you haven't already jumped in. If you guys are following me, you would have already had this trade. You would have already been in it. Because I posted this late last night, I think, something like that. But you guys normally would get flagged if I do a live stream or video of any sort if you guys are following me. So if you get an opportunity and you like what you see, just go ahead and follow. And then anytime I do anything, any of these things, they'll all pop up. Also, make sure you boost anything that you like. So let's say this trade, this is the one I was telling you guys I did 7 hours ago. This is the one I'm currently in. And I did a whole video explaining why I believe it was coming down. And so if you see videos like this and you like them or you took them and, you can comment right here or give it a boost so that somebody else can see it and take advantage of it as well. Since you were blessed, bless somebody else by just boosting it. That's all you got to do. You can check out everything here. Also, you guys can follow me. I'm the Chief Investment Officer at ToshiMarkets.com. So you guys can go there and check out the company. Also have another company. This is for those who are outside of the U.S. So if you're outside the U.S., ToshiMarkets.com, check us out. If you're within the U.S., we're Fx'tive H&W. And so you can go to just YouTube, check out some videos here. But if you want to get a hold of us here in the U.S., we have a Telegram channel. You can ask us any questions here at Daily Bread Q&A. There's a different Telegram channel here with Toshi Markets, and it is simply Toshi Markets. That's the Telegram channel there. So you can catch me at either one of those. But outside of that, yeah, just give it a boost or follow me, and you guys will be in the trade early too. Every Tuesday, I try to do a live stream of where I'm at and what I'm doing. And so that's the reason for today. And it was a perfect day because today we had consumer confidence news. And again, that happens on the last Tuesday of every month by the conference board. What they do is they send out this survey. I think it has about 3,000 questions on it. And they're trying to gauge how people feel about the current economy and about their finances and about the spending and the prices of stuff when they go out to buy it. All that good stuff. And so based on how they feel, that moves this. Let's actually take a look at Dixie. Since this went down, Dixie should have gone up. Let's see here. Let's try CFD Dixie. And it did. So Dixie is still reacting to this major support level that I found. I'm waiting for the downtrend anchor break to happen. Once that downtrend anchor break happens, then euro dollar is going to take off and go long. But until then, while this is going long, euro dollar is going to be shorty. We can see it coming into some minor resistance here. I don't know where I got this from, but we can see it's already breaking the minor resistance level. It came down here, hit the support level, broke minor resistance. So I'm anticipating it's probably going to go higher. I didn't write down the time frame I was looking at. Guess I forgot. So let's check out. I got 1 day on here. We're an anchor break. Oh, it already broke that. All right. So this looks like it's going. They're turning at the most weirdest spot. But okay. Oh, I must have saw something on the 80-minute here as well. Resistance minor. So right now we're looking at a downtrend. You guys can see that here. The sellers are currently winning. You would have to break. Let me get rid of this. This right here would be the that's the uptrend anchor break. And this is based on the daily. Yeah, price action would have to break this for it to continue the uptrend. Otherwise, it's probably not going to go past this here. And let's mark this as the 1 day. All right, so since the news came out and this went up, what that means is that the US dollar, it takes more US dollars in order to purchase things. Why would it take more US dollars to purchase in comparison to the other countries? Because this is a basket of currencies. That's what this represents, the US dollar index. So it's basically measuring how much US dollars would it take in order to spend money in on average in other countries in the world. So if you take all the other major current countries in the world, you put them all together and imagine if they were one big country and we had to travel to that one big country, how much money would it take for us if we went over there? And right now we are 1.8% below the cost of going to that particular or spending money in other places in the country. So it's like we're overspending by 1.8%, almost 2%. We're over. So that means the economy is not looking, people aren't feeling too good about it right now as it goes up. As they feel better, this thing will start to come down and it'll cost less. And by it costing less, what will happen is it'll have an inverse reaction to the euro dollar. So right now, that consumer spending report must have been a good report. Let's take a look at it, see if they posted any results for it yet. Let's see here. All right. Let's see what we have here.